All right, guys, what's going on? It's Josh, and I got a really good video I want to make. I was inspired by somebody, one of my good friends. I started getting him into trading and seeing what he's done, and it kind of changed my opinions on things. And I wanted to clarify it too. I know I made a video a while ago. If any of you guys see it, I encourage you to go check it out. I turned about $600 into 30,000 with two plays, and I talk about how much to start with trading. And it brought up a question. People were like, "Well, why do you need more than 2,000 bucks if you only did 600?" And that's from a risk management safety point. But I want to talk about actually, taking 1,000 bucks, putting it into an account, and how you could actively grow that. So I got some things I want to go over. I made a little short list to that I want to cover and give you guys some advice on it, because seeing one of my friends do it, it's actually pretty cool to see. And there's been some developments. One, and this is what I said I was surprised with, Robinhood actually, and how you could utilize that. So we'll get into that. If you guys are new, make sure you subscribe, turn on post notifications. If this helps you out, drop a like, comment. And two, I guess, well, this is just going to be me getting into it. When I'm saying starting out in the market, how to get into stocks. If you're new and you don't know anything about my channel, you guys aren't familiar with this, I'm trading options. So options is not like binary options. Those are scams. It's not Forex. It's not anything like that. It's literally stock exchange. It's through the stocks that it represents the movement on stocks. It's an underlying asset. Now, if you guys are unfamiliar, go through my videos or just drop a comment below. If you guys think, hey, I went through, I didn't really understand it, if you can make an updated video, I'll gladly will. But essentially, we're going to be trading stocks, and that's one of the first things, or not stocks, excuse me, options. But again, it is just like trading stocks, and that's one of the first things when it gets down to building a small account. Options is going to provide the way. Now, I have another video, options versus penny stocks and stuff like that, because with a small account, options are very, very useful. Can you lose a lot of money? Yes. And that is one thing too. Anything I'm telling you guys now, understand the risks and paper trade. Go. I have a video I just posted, think or swim. I'm just shooting you guys. Again, if you can see, I have a bunch of videos you could check out. But if you are trying to do this, paper trade at first. Always, always, always stock simulator practice and see what you could do with that before, get your feet wet before kind of diving in, because they are a little complex. But the positive is, with the small account, options are very good in that they move quickly. You could generate gains faster, and really it gives you the opportunity to play these bigger board stocks, these stocks that move a lot, without putting a ton of capital into them. So that's something I really, really like. You will see my other videos, see some of the gains that I do. It's awesome what options could provide. So that's my first thing, is if you want to start with the small account, familiarize yourself with options. And now this is kind of contradicting, because options are not for beginners. So if you only have 1,000 bucks, you want to start trading stocks, understand you're taking a more advanced step. That's why I say paper trade, familiarize yourself with the matter. But is it doable? Yes, but understand it's super risky in that aspect. Now, what I want to start with, you got to just make a brokerage. And again, check out the free stock trading course below. I talk about this. It's a free course. You guys could sign up, get some of the basics for the mentality to understand. But with a small account, you need to select your brokerage now. And what I'm saying, I said zero commission brokers are acceptable, because I'm not a fan of Robinhood at the bigger levels. It's just not really worth it. But if you are starting with 1,000 bucks less, and what makes me say this, because I saw somebody do this with like 100, 200 bucks, and it was crazy, because buying options with zero commission, they were easily able to buy a $15, $20 option and make 10, 15 bucks. And the fact that they didn't have commission, well, it allowed them to do that, once every couple days, and you can make 100, 200 bucks a week very off of a very small amount, a lot more effectively with no commissions, because commissions do bite you. But I prefer it on the level of, when I'm dealing with a big account with bigger money, I'm not going to put it in a Robinhood. But if you're only using a little bit amount of money, even a couple $100, I could consider a broker like Robinhood. I think JP Morgan Chase just came out with their own free platform, but check that out and how you could use that to your advantage. Now, the only thing I do say that you need to look out for is making sure you get real data. And what I mean by real data is real time data, because Robinhood is going to be delayed, and it's very confusing off the get-go. If you're new, you might be like, well, what do you mean real-time data? Not all data is equivalent. You might see there's no such thing as like a price tag on a stock. It's based upon what the market is offering for it at that given moment, and options are very volatile and it shifts. So you want to make sure that you're able to get in and be able to verify the price of the contract. So go to a cheap brokerage and make sure you have access to the data and what the option prices are. The next thing, with building a small account is aiming small until you could build an account to take more sizable positions. And what I mean by that, aim small in both the contract prices, and I'm going to discuss what this means too later on, and then with another thing I wrote on this list, but also aim small, only aim for that 20, 30, 40, 50 bucks a trade until you're able to build up an account bigger where you could start taking those $200, $300, $400 positions on an option. And why do I say this? And you have to be diligent, and don't let this overshadow the fact that you could get shitty options. Okay, you don't want to just aim, okay, I'm only getting $20 options, I'm going to buy something, way out of the money. It's like we could go look at Google and say, okay, I'm going to buy an option for next week, I'm only going to put in 30 bucks. If you're going to buy the 1300 or 1297 to say Google's going to move 70 bucks in a week, is that possible? Yes. Is it probable? No. And that's why the option is so cheap. That's not a good play. You would be better off maybe buying a $200 or $300 option where it has a chance of going in. And we'll even talk about the different prices you go for. But what I mean by that is aim small, and you take the good trades. That's it. You got to aim small. Don't go for something too big. And this is one thing I saw my buddy do, and I corrected him on it. He was like, oh, well, I don't care about the money, I just want a big gain. I was like, well, that's caring about the money. If you're winning and you have the ability, even if it's a $20 trade and that $20 goes to 40 bucks, no commissions, you're making 20 bucks on that, 50%, take it. Because if you could, it's easy to do that, easier to rinse, repeat with those smaller amounts. And usually what I always say is taking your profits when you're green, you're going to realize that's just a great strategy. Don't try to milk it and go for something crazy when you don't need to do that, essentially. It's just not really recommended. So aim small until you could get those. The next thing now is watch for the pattern day trading rule and how you could avoid it. It's very simple. If you have an account less than 25,000, you can't buy and sell in a 5-day period. You can't buy and sell a stock in the same trading day. Easiest way to get around it, buy it in the morning, sell it at the next morning, or buy it at close, sell it in the morning. Can you make day trades? Yes. But now with options and these small $20 contracts, yeah, make a day trade. You buy it for 20 bucks, it shoots up to 60, 80 bucks in a day. Yeah, you could sell it. But essentially, watch out for that and just swing trade it. That's the number one strategy I use. That's what I'm doing. I'm not really day trading, I'm swing trading, and it pays off very great. Go look at some of my recent trades that I've posted. You'll see some I've sold in a day, some the same day, but most of the time I'm buying and I'm holding them. So do that. And now this relates to the next thing. Don't overtrade or increase your trade frequency even after a big win. So this is two separate things. One, just don't overtrade. Again, and this relates to the pattern day trade rule. Avoid pattern day trading should keep you in check. Don't overtrade. There's not always going to be a trade, and that's something else we have on the list. You just got to make sure you control it. Trade, go aim small, 60, 100 bucks a week. If you're starting with a couple $100, even $100 in account, you could double, triple your account that until you're starting to take advantage of it. Jax, be quiet. I don't know if you guys hear him. But putting this into perspective now, you see you don't want to overtrade and increase your trade frequency. And the more you trade, the more you expose your capital out there, the more likely you are going to lose. And a big mistake is you make a trade now and then people increase their trade frequency. They're very conservative. Their first couple trades, they only had I've seen this guy, my other buddy, had $100, $200 account, and he made like 40, 50 bucks, or he made 150 bucks, but his first trades, he would put 10, 20 bucks in and would make good money on those. Then after he started winning, he was buying other random plays for like 40, 50 bucks. I was like, why are you doing that? I was like, oh, well, I won and I was like, it doesn't make sense. Do what got you the money in the first place. And if you guys trade a lot, the more you trade, the more likely you are going to mess up. It's simple as that. Somebody who takes 100 free throws is going to more likely to miss 20 of them than someone who takes 10. You'll miss 2 of them. So same percentage of win and success, but with stocks, you don't know, the varying degrees. It's not a 1-for-1 trade-off. Some gains you're going to make more money than others, and some you'll lose more than others, and that's something else we have on here. And this is be prepared to lose, identify your risk reward, and make sure your winners are bigger than your losers. This is something a lot of people overlook. You're going to be prepared to lose. Even if you trade 50 or 60% success rate, there's going to be statistically a point where you might miss 6 trades in a row. Be prepared to lose, and don't let that change your plan. If you're only putting 20, 40, 50 bucks in each play, don't change that and go less or more. Don't be hesitant because you lost, and don't be over ambitious because you lost and try to change that. Just stick to a plan, stay with it, and just don't go crazy on it. And be prepared to understand losing is part of the game. I've showed my losses. I lose all the time. I just make sure my winners are bigger than my losers. I could lose 80% of the time and still be profitable because of the percentage of plays I'm working out where I'm trying to get 500% on a play. So make sure you keep that in mind and always identify how much money you're putting in, how much money could come out, what is your risk reward, how much if you lose. And this is going to even come into hedging and how you can make good hedges on both sides. Lastly, my favorite one for a small account, this is where people really mess up. There's not going to be a trade every day. No other way to put it. You're not going to find a good trade every day. You might have a streak where there's 1, 2, 3 trades in a day, but don't get caught up with musical chairs. The day there's not a trade, you go in short expirations and get crushed. It just bad news all around. But there's not going to be a trade every day. Be comfortable waiting a couple days. Be comfortable waiting a week. And that might suck if you're like, oh, I want to make, and again, this is the difference. I'm saying how to make money with a small amount of money, not how to take a small account and grow it fast. It's just how to grow a small account and grow it to something that could really be a worthy investment one day that you could use for real estate, buying long, or even just now a bigger options trading account to even grow further and further to reach some of those other goals. So understand though, there's not going to be a trade every day. You got to be, you don't want to wait for the perfect weather, because the farmer who waits for the perfect weather never plants, but you also don't want to be the guy just throwing money out there when there's really no opportunity. So be diligent with that and be okay with sitting there all day. And that's why I say get into real estate, go do something, get into e-commerce, do whatever you need to, go get a job, go literally go get a 9 to 5 job where you could just check on your phone, do what you need to do, but do something throughout the other parts of the day to make money or keep yourself busy. You don't have to always look at it all the time. And that's where most people fail. They're just looking at it all the time and they're tending to it too much. It's the same thing with growing a plant. And that's what this is going to be like. A small account is like growing a little baby plant, a baby tree, baby flower, baby weed, marijuana leaf, canopy growth. Holla at me, 30%. No, but if you wanted to do something like that, most people, they'll kill their plants just over watering it. They water it. Okay, it's not growing. Okay, the next day it grows a little bit, like, oh my gosh, and they give it all this food and nutrients and water, and they'll kill it by caring too much. So you can't care too much when it comes to this. You need to just have a plan and a solid financial and emotional framework, and that's all you guys need. So that's just the basics to starting with the small account. What amount can you guys start with? I recommend $1,000, $2,000, probably preferable, but understand and have realistic expectations and what's going to come from it, and understand you could blow it up pretty quick. And that's especially with options when, contracts are very volatile. You can lose your investment, especially if you don't know what you're doing. You could buy a trade, you get killed on the IV in 10 minutes, lose your whole account if you buy a contract at the wrong price. I have horror stories I could probably go find recordings of and show you. So be careful of that. But understand you don't need too much to get involved with options, but you are going to need practice and diligence. And that's why I say paper trade or just aim small, go small. If you really want to practice, aim and practice small. And I like Robinhood for that. I don't like it for bigger accounts, but after seeing what my buddies did, he's kind of changed my heart to it, but it's not too bad. So anyways, I'll leave it at that. Hopefully that helps. Give me some questions. I'd love to answer them for you guys, and I love you all. Peace.